Welcome back to the channel, everyone. In Paribus, people, what's going on? Manny B Investing MBI, and we're going to take a look at a Paribus blog. I think this is a really nice blog. I think it goes through something that's relevant to what we're here for, which is money. We're here for money. Let's take a listen, or not a listen, but a look at the blog. What is money? What is money? It seems like an obvious question, but the answer is somewhat more complex than you may at first have thought. Money isn't just the jiggle in your piggy bank or the folds in your pocket. There are at least 5 different types of money in an economy, often referred to as MO, M1, M2, M3, and M4. MO through M4 refers to the type of money that is in circulation at any given time, and understanding these concepts helps to explain why the US dollar is still in short supply. Very shocking. Given the economy across the globe, you would think that the US dollar is not in short supply. At a time when the dollar should be weak due to unprecedented monetary inflation by the Federal Reserve, it's actually outperforming every other major currency. MO is commonly referred to as base money. This is the money that the central bank, such as the U.S. Federal Reserve, creates and prints. When this money enters circulation, such as through buying securities or as a direct payments to the public in times of crisis, like the PPP loan thing, the stimulus checks, if you were fortunate enough to get one of those or 2 of those, it can go on to create other types of money. When base money enters the banking system, it can either remain static or be multiplied depending on the type of account it's deposited into. If the account is highly liquid, such as a current or checking account, the original money remains in the same quantity as base money, but it's now referred to as M1. M1 starts to become complicated due to the way that the modern fractional reserve banking system works. We look at this in a previous article, so they link a previous article there. How does finance work? But to summarize the main points, banks don't have to keep all the money that's deposited with them. If that money is held in less liquid accounts, such as a savings account, it can be used to secure debt. In this context, liquidity refers to how easily accessible the money is, and less liquid accounts usually impose a time delay to access the funds within them. So you have that 3-day hold, the pending statuses on deposits and withdrawals. So that's what that is all about. The reason for the delay is that the funds don't exist in full anymore in an account, and this allows for a buffer for the bank to replace the money in time for it to be drawn down. In the US, regulated banks only need to keep 4% of the funds in reserve for every loan they make, which is crazy. I think we've talked about that on other stuff, how they can take $100,000 and take on $1 million in debt or loans, which is just crazy to me because we can't do that. We have to have the cash, but the government, they don't need to have that cash. It's very weird, very weird. All right, so the U.S. regulated banks only need 4%. So if someone deposits $100 into a savings account, it means the bank can now use over 90% of that deposit to secure new loans. This creates additional money, which, if deposited into another checking account, is added to the total of M1 money, whereas MO is the base money that the central bank has created from nowhere. Broadly speaking, M1 is the total of the base money plus any additional money that regulated banks have created that's also stored in highly liquid accounts. M2 is a combined total of M1 plus any money that has been deposited into less liquid accounts, such as a savings account. In the US, the main measurement of money supply and circulation are M1 and M2. However, in other countries such as the UK, the bank also takes into account M3 and M4. The latter 2 types of money refers to more illiquid forms such as mutual funds, commercial papers, and assets outside of regulated banks. Normally within one country, The central bank will move between monetary tightening and easing by hiking or cutting interest rates, like what they're doing in America. They're hiking interest rates on things like homes, something that's really expensive that average everyday people typically either have or are in search of, is housing, a home ownership. It's kind of like in America, it's our culture. Home ownership is the American dream. People come far and wide to come here to accomplish the goal of owning a home with a white picket fence with a couple of kids and a dog in the yard. So that dream is packaged up and sold to Americans, and they leverage that or manipulate us using interest rates. How much we have to pay in interest on the loan to secure a home for ourselves and our families. They do this to either reduce the amount of money that banks are creating in new loans or incentivizes the creation of new money in loans. When the money supply is high, such as when M1 is rising faster than MO, it indicates that banks are creating lots of new money in the forms of loans. This in turn means that consumers will usually spend that money on products and increase the demand for goods, which is what happened during COVID. There was a bunch of money floating around, a bunch of people that didn't typically have cash inflows suddenly had thousands and thousands of dollars that they would otherwise not have. And what did that cause? It caused a huge and massive run on consumer electronics and other goods. So things like PlayStations, Xboxes, sneakers, cell phones, Ring doorbells. They were just selling out. They were just in constraint. People were going out and just spending money. That caused a problem. When an economy is in a recession, this is a good thing. But when there's high inflation, it's a bad thing, as it drives prices higher if the demand outstrips supply. And you can think of the American car industry for that example. You have Corvettes that are supposed to have an MSRP of $90,000, selling for $160,000, not in resale, but at the retailers. The retailers are marking these things up because they are very, very, very hard to get because of the supply. As with all things, it's not a clear-cut black and white situation. There's plenty of nuances such as supply, side velocity. If there's lots of money in the economy and no problems with supply, this doesn't cause prices to rise. In fact, it expands the economy and makes it healthier. This is why regulated banks are allowed to create money from thin air. It's a delegation of powers of the central bank to help the economy expand. Well, at least that's what they're telling us. When there are limits on the supply of goods and lots of money in the economy, it usually causes price to increase or inflate. This is happening dramatically in many economies, especially the UK and Europe, due to the energy crisis they are facing as winter approaches. And this is a self-inflicted energy crisis. They made a decision to follow a philosophy that people are either on one side of the fence or the other on. Honestly, in my personal opinion, and it's okay. The greater crypto space seems to lean more conservative. They shot themselves in the foot. That's just flat out what happened. This was a completely avoidable situation for them, and then he didn't avoid it. Recently in the U.S., too, there's significant inflation due to mainly to the costs occurred by imposing sanctions on Russia. It was really, really not good. Things were already kind of headed in a bad direction, and I think there was a lot of gas put on the fire with this whole sanctions on Russia thing, in which a lot of the results negatively impacted American citizens, which in turn increased the cost of fuel and commodities. However, whereas other countries' currencies are losing value due to inflation, the US dollar is continuing its parabolic rise in strength. This is due to the fact that the US dollar is the world reserve currency. Well, lucky us. Over 80% of the international trade takes place using the US dollar, and despite the increase in domestic money printing, there's a supply issue for foreign countries in getting enough US dollars. As global prices have increased, so has the demand for the US dollars for the rest of the world. As its strength increases, it also weakens other currencies and becomes an over-increasing spiral. And I'm seeing a lot of news outlets posting screenshots comparing the US dollar to other popular currencies that typically or historically are worth more than the dollar, like the euro and the Canadian dollar, the GBP, the British pound, things like that. So very, very, very interesting to see how things are playing out. The result is the U.S. exports become more expensive. Transnational trades that are conducted in U.S. dollars become more expensive for everyone except the U.S. And imports to the U.S. become cheaper. Understanding the role that the U.S. dollar plays in global trade also goes some way to explaining why regulators are so concerned with dollar-denominated stablecoins, which is a subject we'll look at later in the week. Overall, money isn't just the cash you have in your hands. It can be created by central banks and multiplied by regulated banks. In times where money no longer needs to be backed by anything physical, we've yet to see how central banks and regulators manage to stabilize everyone's finances in an ever more unstable world. The beauty and promise of DeFi is that it allows each project to create its own monetary policy. Tokens can be limited, they can be deflationary or inflationary. Moreover, the choices between each approach can be voted for and implemented by token holders rather than dictated by central banks. So there you have it. This kind of, if you are, a thinker, and you're thinking, this information is very interesting. How can I apply this to crypto? How can I apply this to my everyday life, my existence, and understanding the world economy in this kind of world event that we're all going through right now on the planet? I think this is all a threat. I believe this technology that we love and we cherish, and maybe some of you are looking to get into this and you really just want to understand what's going on and how it all works. Don't worry. I will be going over projects. I will be going over DeFi and things like that to help you understand how this world works and explaining what things are. But for everyone else, I look at this information and it answers a lot of questions for me. Why is the U.S. so reluctant to regulate crypto when they do give a sign that they're interested in something? The angle, the project, why are they making these decisions? Why are they saying these things? Why aren't they acting? I think a lot of this spells that out for us. It's all about control. The ability to control, regardless of what it is, whether it's to manipulate and to negatively impact culture, negatively impact the citizenship, or if it is to pull back, if it's to save, if it's to keep things from crashing. They have the power to do that. And with this decentralized financial world that's being built right now, if that becomes the standard, it's going to become increasingly hard for them to control things. And even if they do figure out a way to do it, or they have enough control over humans that control crypto, it's going to be different. And how people hate change. But I think it's inevitable. I believe it's inevitable. And I really feel that a lot of my followers feel the same way. So hopefully sometime soon, we will see traction with this technology, and we'll see the players really start to pull away from the pack, and you'll start to see those projects that are just there to be there to start to fall through the floors, and then things will start to look more normal for us. So thank you for checking out the channel. Thank you for subscribing to me. I'm going to be creating content where I haven't gone anywhere. I've been hanging out, been reading a lot, been watching and listening to what's going on in the space. And I'm very excited to kind of jump back into things and start learning again and start talking about the things that I learned and the things that I come across. So thank you for checking out the channel. Make sure you hit that like, hit that share, subscribe, and we'll see you on the next one. Peace.